Hello, this is Rick Cortez, and this is the June 2025 update on the Westwood Broadmark Tactical Growth Strategy. And let me review our four pillars for you right off the bat. Number one, equity valuations are negative. They're a little better than they were at the beginning of the year, but they're still in the top quintile historically, and that's negative. Number two, investor sentiment. I can firmly say that investor sentiment is solidly neutral now, after swinging from wildly bullish to wildly bearish, back to wildly bullish, depending upon what day of the week an announcement on tariffs was made. It's right now, both our intermediate and daily sentiment indicators are neutral, so they're not telling us anything. Momentum. Momentum is positive, and in deference to momentum, don't fight the tape, we do have a small long position in the market. But by far, the most significant change in our models is related to monetary policy and credit conditions. The Fed has been accommodative, but right now the Fed has seemingly put on hold further interest rate cuts until they see the effect of tariffs on price levels, number one. And number two, is this spending bill going to go through, and are we going to see more debt? And debt is on a lot of people's minds right now. Take a look at this chart. This is a chart of U.S. debt to GDP, and it goes back to 1790. It shows that debt levels in America now are where they were during World War II. And this is published by the Congressional Budget Office. So if things continue as they are, debt is going to go a lot higher, and it'll be the highest in our history. The second chart is a chart that I've shown before, which is the interest on our national debt. And the interest on our debt now exceeds defense spending. It also exceeds Medicare. And a fellow named Ferguson in 1767 developed Ferguson's Law, which says that when the interest on your national debt exceeds your defense spending, that's not good for an economy. And he went back to the Ottoman Empire to show this. This is in the 1700s. He wrote it actually 9 years before Adam Smith wrote The Wealth of Nations. Ken Rogoff of Harvard has updated that analysis of Ferguson's Law and found similar conclusions. So debt is front and center right now. In fact, Jamie Dimon of JP Morgan, in a recent interview, said the bond market could have a crack in it. There could be a crack in the bond market. I will tell you, I used to be a U.S. government trader back in my young days, late 70s and in 1980s, in those inflationary days. And if the chairman of JP Morgan told me that my market was going to have a crack in it, I'd listen to him, and I'd be scared. And I think we all should be concerned about this. That said, we don't predict, we adapt. Things can change very rapidly, but given the status of our pillars and the risks in the market right now, we have approximately a 20% exposure to the market, 80% in cash or cash equivalents. Treasury bills are now yielding over 4%. So we think we're well positioned, and we have a defensive position right now, at least for the foreseeable future. But things can change. So thank you for joining me. Please join me next month for the next update. Thank you.